Good afternoon, everyone. Brian Hoops here with Midwest Market Solutions, giving you a closing market commentary on Friday, July the 11th. This is a little bit different than we do normally audio commentaries wrapping up the supply and demand report. We did one on our website earlier today, giving you the analysis of the supply and demand report. We're going to do a little bit of an audio video feature here tonight, talking about some of the numbers in the report, and then also looking at some weekly charts for direction for prices going forward. Today is Friday, July the 11th, and if you like these internet video series, you can access more at our internet YouTube page, Midwest Market Solutions. If you type that in your YouTube search bar, you'll find some of our archived numbers. All right, before we go any further, we want to say we are copyrighted by 2014 Midwest Market Solutions. This broadcast is copyright, and risk of loss in trading in futures is substantial, and each investor and or trader must consider whether this is a suitable investment. Past performance is not indicative of future results. Trading advice is based on information taken from trades and services and other sources that we believe are reliable. We do not guarantee such information is accurate or complete, and it should not be relied upon as such. Trading advice reflects our good faith judgment at a specific time and subject to change without notice. There's no guarantee that the advice that we give will result in profitable trades. All right, let's get into this here. And again, if you have any questions or comments on things we talked about today, let's just send me an email or give me a call, and we can discuss them again. All right, let's look at the numbers here on the crop report. Make this a little bit larger for everybody to see. I highlighted in yellow some of the key numbers to talk about. Let's look first at production. We'll pull this up here on the screen. Corn production and soybean production, wheat production, really not that much different than average trade guess. And compared to the prior USDA estimates, actually corn is down a little bit. That is a result of the decreased corn acres in the June acreage report. They left the yield unchanged, 165.3 million bushels. I really think there's indications going forward in August and September reports are going to jump that number up, maybe close to 170 or above. And we've had other good growing years, 99, 94, come to mind, where they've jumped yields 3 to 4 bushels per acre in the summer. And so I think there's a precedence for them to do that in the future. But we're left with production 13.86 and soybeans at 3.8. Well, that's a record large soybean number, second largest in history in the corn. But we could see the largest if we increase the bushels per yield number going forward. All wheat at 1.992, real close to the average trade guess, 50 million more than last month. So no surprises out of this numbers, and nothing really we want to discuss any further. Corn ending stocks projected to be 1.801, close to the average trade guess, and larger than last month, as we found more old crop corn down here in this column, 1.246, up 100 million bushels from last month. Soybeans at 140, up 15 from last month's 125. That's why we saw such a big drop in July and August soybeans today. Of course, this 15 million bushels of soybeans and 100 million bushels of corn carries over into the next marketing year. So we see a big jump of about 90 million bushels in soybean ending stocks and nearly 100 in the corn stocks. So we have a lot more analysis of what specifically was raised in this USD report in our newsletter that'll come out on Monday, so check that out. It should be emailed to clients and subscribers Monday morning. You can check it out online at MidwestMarketSolutions.com. Wheat stocks 660, above the average trade guess and bearish for this market. Now, what these numbers tell us in the big picture, we have plenty of corn, soybeans, and wheat on hand, and that means lower prices unless we get a weather event. All right, let's look at some weekly charts here for price direction. Here's the first soybean chart. This is a weekly chart. Right in this area, we saw some support around this $12 mark because of here. Once we were unable to make new highs and took out 1240 support, it's when we got real bearish and locked in some put options for downside protection. We pretty much have been a straight fall and look to be closing in on this support down this 1210 to 1222 area. That's where we could find some support, and if we break through that, then we were talking about dropping down here into this area. Let me draw this on the chart. This area should offer good support, but look how far down this is. This is 875, 876 area. So big drop if we don't hold in this $10 mark. But I think there's a good chance we will. Now let's look at the Commitment of Traders report in here. Here we are as of Friday's Commitment of Traders. It's a bullish COT data. I've written this here on the chart. Commercials are long 63,000 contracts. We got to go back to this time frame before we see any commercial purchases even close to being that type of bullish, and even then they're only 24 to 28,000 contracts long. We go back to here in 2010, again 24 to 29,000 contracts net long. So commercials are holding a huge bullish position in here. The fund selling is accelerating, and what drives prices up or down is not so much the commercial buying, but it's actually the fund selling. And you can see when the commercials crossed over where the commercials are and started going actually net short, right in this area, if we draw a line up, that is when the prices really started to sell off right in this 1235 area. So that's been the big drop here of $1.50 on the fund selling. How long will this last? Well, that's the trend of the market, and so until we find some support in here, these funds will keep selling, keep selling, keep selling. They're still long 478 contracts. Historically, you can see by the black line in here, they do not get short very often. And down in this area, that was about the closest they became to going net short, and that's when prices were around $6. So we're at a different price level certainly than where we were at back here, but the funds never did actually go net short, and we'll see if we can find some reason for them to get long in here. Now, I think this price trend drops all the way into August, and then we got a little seasonal tendency to rally. So we're going to look to see if this area holds 10, 15, 10, 20 area. If it does, we're going to be looking to get out of our puts and actually get long, looking for some sort of a rally in August and September before going into harvest. So bullish commitment traders here wanted to talk about that and show that to you, but timing is everything. Look for this support to get tested first. All right, let's look over at corn. Here we're on to some major support down to 379, major support area. We are at 382 on Friday's low. Definitely look for prices to follow some follow-through selling early part of next week. We broke through 430 support with no problem, went right on through to 379. If we break 379, what's going to be our next area of support? Well, you've got a little bit of leg over here from 2010. That low was around 325. So if we draw a chart support there, chart support line, we're looking at 325 as our next area of support. So long ways down in here. Do look for this 379 to get tested, and 325 could be our harvest lows. All right, there's some other markets that made some major swings here, and we're going to pull up a couple charts. Feeder cattle. This is the pit chart, so you can see commercial positions here, but let's ignore that. Just look at this outside bar. Look at this big outside bar here. We've got highlighted for you. That was last week's feeder cattle market. Now, I've highlighted in blue some of these other ones, but none have been as major or significant as the one that was occurred last week. You almost have to go back into right here, June of 2012, to see something as dramatic as what we saw this last week as far as a weekly reversal. We were a high of 190.80 and fell to 162 before things bottomed out and started to rally again. That's almost a $30 drop. We take that same type of analysis, 218, take 30 off, you're looking at what, 182, somewhere in that range. You can pull back into right in this area of support. We look at an electronic chart here on feeders. Got some major support. There's major support, probably not that far off. We're looking at 194, another weekly reversal back here that we talked about. Maybe you could pull back to this bullish breakout support area. It would be down here in this 179 area. So somewhere down in here is a likely target for this market to pull back to. Of course, you can always look at retracements on feeder cattle. Simple Fibonacci chart retracement from high to low. 62% also coincides with 178.40 or so. So there's some technical downside targets for this feeder cattle market, going from a 211 down to 178. All right, that's going to do it for today. We hope you have enjoyed this internet session. please let us know what you think of it, or if you'd like something else talked about in the future. Have a great evening. Give us a call. Our number, 605-660-1155, reaches me directly. This has been Brian Hoops for Midwest Market Solutions. Good night. Have a good weekend.